Will Bitcoin price surge or sink? Fate lies in Jpow'S economic outlook, and we are not too far away from hearing what that outlook is. Hey guys, it's Keith Allen, and we're getting down to the wire here, right? So we've got this fateful Fed rate cut announcement day. Is this a day that the market has been waiting for? Or really, it is a day that we've all been waiting for, but quite frankly, I'm not sure if the market really knows what's in store after this, because there's really just no clarity on what a Fed rate cut decision is going to be. Lots of speculation over 25 basis points versus 50 basis points, and some noise about 75 basis points. And really what matters is what happens after this. A cut of some way, shape, and form is baked in, as are a series of cuts up to and through next year, likely at this stage. And that, of course, can change along the way, and we'll be watching for those changes as things evolve and develop. But a lot of that is going to come down to not what happens today with the form of the cut, but what the outlook is beyond the cut. Obviously, the Fed is trying to get back down to that 2% inflation target. Obviously, they're trying to keep unemployment under control. And this is the dual mandate. Well, what's it going to take to get there? And there's been speculation over whether a 50 basis point cut gets us there faster, or whether a 50 basis point cut actually eludes to a deeper problem. And so it's really difficult to speculate on how price is going to react just based on what the size of the rate cut is going to be. So that's why we're going to focus on the order book and the technicals to try and get some clues of where we're going from here. In the meantime, before we dive in, before we take that deep dive, do me a favor. And if you like the streams, go ahead and smash all the buttons, hit them all, each and every one of them, the like button, the share button, and most importantly, the subscribe button. Yes, the one that's right up there, the little bell, hit it so that you never miss one of these streams. And of course, share a comment with me. I love engaging with the comments. I engage with each and every one of them. In fact, the live comments are open here. Live chat is open in the on the YouTube feed. So join me here and let's chat about what's going on here. So let's start out, I guess, with a kind of a holistic view of the order book and where the liquidity is and how that compares to where technical resistance and support are. And what we're going to see is that it's pretty well correlated right now, which is always, in my opinion, a good sign. Let's move into fire charts here, and I'm zoomed out to a 6-month view because I think this illustrates, really, this best illustrates what's happening here. What's most important, anyways. And we can filter out some of the lower levels if you really want to focus on what's most critically important, and that's the brightest areas on the chart, right? And so, yes, we have a pocket. Maybe I took too much out. We have some liquidity right below us, obviously, that's holding things up in this range. But really, the key levels, the guardrails, if you will, we have quite a bit of liquidity stacked above that 61.5 level, really 62 into the 63.5 level, and then a little gap, and then we get into that 65K range, and then down to the downside. Obviously, the bulk of the bid liquidity and support is down at that 50K level, up to 51.5-ish, 51.750. But we have a nice couple of blocks of support here locally from 54 and about 54.7 up to 56.5. or 56.6 or so. And if we look at the candle chart, we can see that this aligns really nicely with where we have technical resistance with the 21-week moving average here, just shy of 63K, and support at the 50-week moving average. 21-week is green, 50-week is red. And of course, we also have this double bottom right here. So if we have a little overshoot of the 50-week That doesn't bother me. We have this double bottom support, and as you know, potentially even this wick down to the lower low. Um, Making a lower low here would allude to a um, bigger correction coming. Uh, I don't think that's going to happen here at this point. To be honest with you, I think that we're in a situation where this price would likely hold. If it doesn't, we're going to get down here pretty quick. And if this doesn't hold, then obviously our next line here is the trend line. To the upside, we have this technical resistance here at the 21-week moving average, but we also have um, really strong resistance at this 2021 mid-cycle top, which is just shy of 65K. And from there, we would have to climb up and then take out the 2021 top, which has just been like pretty much a brutal challenge since March, right? When we first got there. We've been rejected from that one so many times. It's even hard to count, but it's dozens of times that we've engaged with this 2021 top and been rejected here along the way. Let me just remove at least one line on the chart and make it a little bit easier to see. So that's kind of where I'm looking at in terms of key resistance and support and where we might go from here. I think that it's largely believed that this might initially, there's always a knee-jerk reaction to this kind of news, right? And maybe this will end up being a another buy the rumor, sell the news event. But this one is a little bit different in that it's going to go on for a long time. We expect to see a series of rate cuts coming, not just from after what starts today. We'll see more likely in November and December, and then into 2025. So the outlook that we're looking for out of Powell is, is he going to allude to what the targets are and the timeline? In other words, what's the pace and velocity of what he plans on doing? Or is he going to remain slow and methodical and tell us he's data dependent each time, which is probably the most likely scenario, just based on how he's operated. There's been lots of speculation over the history of rate cuts, and I went into that pretty deep yesterday. You can find that analysis on YouTube and X, but I'll just show you just very, very briefly that there is not really a distinctive pattern over how price responds, how markets react to rate cuts. It's much more dependent on what the reason is for the rate cuts, the size of the rate cuts, and the speed at which the series of cuts happens, and what the outlook is beyond that. And, from what I've gathered here, aggressive cuts, larger cuts in a shorter amount of time typically means something bad. They're trying to dodge something bad or pull out of a nosedive for the economy. And the market usually does not like that. And when cuts are smaller and more methodical, spaced out over time, as you can see here, the market seems to respond better to that. So in a nutshell, you can't say, oh, history tells us that when they make a 50 basis point cut, the market dumps, and when they make a 25 basis point cut, the market goes up. It doesn't work like that. It is much more dependent on the variables, including, and most importantly, what the outlook is, forward-looking outlook is. You could say that, one of the other variables is how far in advance did the market know this was coming. Sometimes in history, there have been like surprise rate cuts. No surprise here. This has been telegraphed for months and months and months and months. So nobody is caught off guard by this move. So I guess what the point I'm trying to make here is you can't come to a conclusion just based on this historical data. About the only thing that is constant is cuts tend to happen when unemployment is going up. And we see unemployment has ticked up, and they're trying to prevent it from ticking up significantly further. And so rate cuts are going to begin. In terms of what that means in terms of our short-term outlook, like what's going to happen today, well, we looked at where the technical levels are on the chart, and now let's look at where liquidity is. And I say frequently that liquidity dampens volatility. And when there's when we have, walls or ladders of liquidity in either direction, that will make it harder for price to move through. As you can see, like through the course of the day, we've seen some ask liquidity dropping lower, and that had the net effect of pushing price down. But now we see some, and we actually also saw some bids move lower too. Let's see if we can tighten up into this. I think I need to refresh. Um, this is working in both directions, but what we have seen is whales have been buying through this, so that's interesting to see. Um, all right, looks like I'm having a little bit of lag here on my excuse me, on my internet. So let's go back to the candle chart here for a second and identify, in the shorter time frame, you see that now the 50-day moving average served as support here on this local dip here. But it's the weeklies that I think we really need to be most focused on. And you can see we have a nice trend precognition signal, set of signals that got us up here, which is an indication that price not likely to dip below this level, which would correlate with the 50 week moving average. So that's a net positive in my opinion, for the longer term outlook. Let's see, did I get what I wanted here? I wanted to get to the daily chart. Okay, so we did have a little bit of movement with bid liquidity. It moved up, then it moved back down. But what I'm looking at most importantly is that whales were buying, purple whales were buying, brown whales bought a little bit. Even this green class is buying significantly, and this is this is not an insignificant amount here. We're talking in the period of 4 or 5 hours. And from this, we have seen about, let's see what the net is. And then we can, because they're selling, going along with it, the smaller order classes are also selling. But we started at about 99 million. And now we're up to 65. So that's buying 35 million or so net in that period of time. And we can see that purple whales have done the most here. They were down about 18 million, 19 million, we'll call it, and now up to 10 million. So they bought about 30, they bought about 30 million on through that. Just a million or so out of the brown whales, and green has been doing, that's $1,000 to $10,000 orders. They have bought about 14 million in that time. So that's likely not just retail in there. That's likely whales maybe integrating a TWAP bot into a strategy. Retail certainly lives in there as well, but that's a big move right there, right? This and this are big moves. So all in all, we're seeing whales interested in buying as price dips, and so I'm pretty confident in the analysis that I've been giving here throughout the week, and that I do believe that these levels are likely to hold here today. But breaking through would obviously tell us something. Breaking through obviously would speak to a deeper correction. But I think, and I'm going to speculate here a little bit, that based on what I'm seeing right now, that this is likely to hold. We may dip down. We may actually go further down to this 50K level, and there is at the moment some bid liquidity to support that down there. Either way, bottom line is, if the range stays intact, I think all in all, things are going to be good. So that's really what I'm watching for. Whether we break this range or not, I mean, we could continue to chop in this range for a while. Obviously, there's likely to be a knee-jerk reaction to the initial news coming out in about an hour and 10 or so, and then we have the actual press conference with Fed Chair Powell coming 30 minutes after that at I think 2:30 Eastern time. So there's that. Also, of course, the outlook for Bitcoin is as good as it has been. Um, we have seen some actual ETF buying again the past several days. 1, 2, 3, 4 days have all been net positive. And so, even at these price swings, so we got that going for us. Interestingly, the speculation on whether it's 25 or 50 basis points has been all over the map. This morning it was in the like 36% here for calling for a 25 basis point cut. It's changed. Let's refresh again and see if we get closer to 50-50. Where, by the way, we headed into the weekend at 50-50. And, this has been all over the place. So I don't put a lot of stock in this. But I am glad to see it closer to 50-50, because if those that are in the 50 basis point camp are disappointed by a 25 basis point cut, then it's not going to be the recoil shouldn't be so bad, and vice versa. Looks like we got a couple of comments here. ABB says, let's go up. Okay. I'm not in control. 55. Feel free to speculate on occasion. Okay, well, I did. You got my speculation that I think that we're going to hold in the range, and that that double bottom should hold. How is Fire Chart looking at 62? Good question. That's probably the area that we've seen the most movement, as I alluded to a little bit earlier. We saw a little bit of this liquidity starting to shift downward a little bit, and that did indeed push price down. And now we see the buying coming in, and well, will we push back through that? This is the area where we have confluence with the technical resistance on the chart, as I showed, right up here at the 21-week moving average, which is currently sitting right around 62,800. So this, if we can break it through this, there's a lot of liquidity between here and this mid-cycle top, just shy of 65K. So that's an important level to try and clear. I don't know that that's going to happen today. Staying at, what would staying in the range actually mean? Would does it mean this is a nothing burger? No, I think I think that today's news is certainly not a nothing burger. To me, holding the range is a good thing, right? Because we know we have other variables coming up with our presidential election coming, and that's going to be a contentious mess, I'm sure. We also have, Congress trying to fund the government here. Not sure what the deadline is on that, but that's coming up soon. So there's other variables that are going to come into play here. But the most important thing to pay attention to today is, what is Powell's economic outlook coming out of this for the rest of the year, for that matter, and then moving into the early, first quarter or two of 2025. And can we continue to hover here and eventually break out, grind our way above this mid-cycle top? The tough one is going to be this 2021 top. We've spent a lot of time and had many attempts at rejected from there. Before we can ever consider going after a new all-time high, we have to print full candles above this 2021 top, and that just hasn't happened yet. So it's a time for patience for sure. And I will be watching, since speculating doesn't really get us anywhere, I'll keep looking for clues on the technicals and looking for clues in the order book to see where liquidity is pushing and where it's stacking, to get an idea on direction. And at the moment, we're in this range pretty well, but I think that it's conceivable that if we get a good outlook from Powell, that we could conceivably grind up here and test this level before probably getting rejected, at least initially. And then, we're going to play this game of volleyball between longs and short, leveraged longs and shorts, getting pinched in both directions until things settle down, and maybe we have some clarity. If that means clarity on the presidential election or what, remains to be seen. But I think it's going to take some time to get above this level. Going to wrap it right there, guys. Looking forward to the announcement. I'll be watching that closely, and if I see anything developing throughout the day. I'll do my best to keep you guys clued in. In the meantime, again, if you haven't had a chance to do so and you like the stream, smash all the buttons, hit the like, hit the share a comment, and help me grow the channel. Appreciate you guys. As always, trade safe, my friends.